What's up everyone? Let's talk about IV today. As an option seller, an IV is a very important indicator for us when we sell options. Why? Because when you have higher IV, then you can sell your option for much more money. It's kind of a common sense in a way, because when you have something that deemed more dangerous to the person who wants to buy the insurance from you, they want to pay more for it. And that's exactly what IV is. IV stands for implied volatility. So we want to, as an option seller, we want to maximize our premium when we sell our options. So therefore, IV is one of the factors we look into when we sell our options. Now, it really depends on the type of option seller you are. The range of IV that you pick really depends on your tolerance for risk, because as option sellers, we also have risks. When the stock goes above or below or way out of the strike zone, it really makes our account we will take a huge hit on our account. So we have to be careful to carefully balance that risk reward ratio in order to better optimize our returns. So let's take a look at some of the examples that we're talking about. So I have the TradeIV app open. So if I go to the scanner app widgets, there's an IV section scanner. So if I click on that, you should see a list of stocks with the highest IV in the market right now. So like Riot Blockchain, for example, this company, it rides with Bitcoin pretty much. So is Marathon Energy, Petroleum. So they all sort of ride this Bitcoin wave. And as you can see, Bitcoin is currently trading at 56,000. It's crazy. So there's a huge amount of people who thinks that Riot may be too overvalued. So if we look at the Riot's charts, like if you look at this chart, I mean, you don't have to be an expert to see that this is kind of unsustainable. So Riot was trading at about $3 in November to as high as 78 right now. So if you're not a seller, if you're like an options guy who just wants to buy or sell options, sorry, who just want to buy options, you will look at this, you'll be like, you know what, this is too high up. It's gonna pop sooner or later. So I kind of want to buy a put on that, you know. So if let's say I have a lot of positions in Riot and I want to hedge myself, I should buy some puts to cover myself in case it drops down. So it's not a bad idea, because looking at this chart, it's really a no-brainer that it's going to drop very soon. It happens to all of these hype stocks. So that's why there's a huge IV on Riot. This stock has a lot of implied volatility because of the uncertainty. And people are bidding the options for Riot way up simply because they think that, hey, I want to pay a lot of money to protect myself from the downside of the stock. So therefore, as an option seller, you want to make sure that this value here is, in my personal strategy, my opinion, I wouldn't want this to be too high, because if it goes too high, that means the risk is extremely high as well. So for example, looking at the chart, let's say I'm like, hey, you know what, there's 250% IV right now. I could pocket a ton of crazy premium on this, right? I could sell a CSP cash secure put for next week for, I don't know, maybe $51. Right? It's not going to drop 20 bucks in a week, can it? Well, the thing with these hype stock is that it can, and it probably will. So if you are thinking about selling a cash secure puts at $52, you could very likely you're going to hit that. So you want to protect yourself, right? So if you sell the CSP, you might pocket, I don't know, let's say $300 in premium. So that lowers your average buy-in to about $46, $47. So you have some room for you to break even, which is somewhere down here. But you know, this is a stock, like it could pop tomorrow. The bubble could pop tomorrow, and then it could go all the way down to 20s. So now your break-even price is like 48. Now all of a sudden it dropped to 26. So you just lost out on about $2,000 worth of because you are forced to sell them the put at that price. So but the stock just dropped like all the way down. And usually when these stocks drop, they kind of don't go up until another pump. So you are forced to backhold all of that. And when this thing pops, the IV is going to drop straight down because the uncertainty is gone because the stock is already popped, you know. But some people might like the IV might sometimes might still be good because people think, hey, it might go up again, so I'm gonna pay a lot of money for that. So as an option seller, you really have to watch out for this kind of thing. Selling options on these kind of pump stocks, it's probably not a good idea. It's kind of a high risk and semi-medium reward play. So I usually steer clear of that unless I see a opportunity where I can sell like a 1 day or 2 day expiration puts on a specific stock to pocket in the crazy IV. So I did that a couple of times for QS, QuantumScape, and I pocketed in, a couple $100 in premium. So this here is for people who are pretty risk tolerant and they want to gamble and they like to pocket in on these crazy IVs right now. These are all great stocks to sell options on. So if you are that kind of person, feel free to go ahead. But if you are a really risk, like you don't have that high tolerance for that kind of risk, you would just simply do what I've been doing, which is sell cash secured puts on long-term companies that you wish to own, that you don't mind having 100 shares on. Otherwise, for these, they are kind of, you could end up backholding these for a really, really long time. To be honest, it happened to me. I actually did that for SNDL or Nokia or AMC, not GameStop, but like these kind of stock. Like once they drop, they usually don't go back up until the next pump. You see, like things like that. It could happen again to Riot, to Mara. So you have to really watch out for if you're a new beginner, because these kind of pump and dumps, they do happen, and they happen more often than you think. So watch out for that, and it might be better to just buy a puts on that instead of selling a put on these stocks, because you know what's probably coming next. It's probably going to drop and then it's going to be sideways for a long time. So that is my opinion on these crazy high IV stocks. And if you're interested in this app, it's TradeIV.com. Just go in there to the website, sign in with your Google account, and you'll have an account. And you can set up your own watch list. And I have my own trading plan down here. So this widget here allows me to write down what I plan to do for the day, and that allows me to remember what my plans are when I trade, so I don't make rash decisions. I always obey what's in my trading plan in order to be successful. And yeah, all my trades are open. It's in the link in the description below if you want to see, and it's in real time, so completely free. And join our Discord if you want to talk. And that's it for this video. I hope you guys find it useful, and I'll see you guys next time.